the next session was the third panel session, and I've got the, I suppose, the honour of moderating this session, and it's titled "Attracting Investment into Your Agribusinesses." So I'll quickly introduce each panellist before they just provide a brief overview of what they do and how they sort of are relevant to attracting investment to your agribusinesses. So we have a great panel today, and I'll just run through each of them. The first person is Richard Cotter. Richard's a long-time agricultural banker specialising in risk management and commercial banking. Richard currently heads the corporate agribusiness and regional emerging sector for Vic and Tasmania at the ANZ Bank. We have Tim Baird. Tim is the branch head at the Foreign Investment Division in Treasury. We have Jae Debrincat, who's an Associate Director here at Zhining, Australia. Jae has several years of experience supporting the agribusiness sector, particularly in New South Wales, and is a member of Zhining, Australia's Agribusiness Industry Group. Jae has particular experience in developing and implementing tax-efficient structures, tax governance and risk management consulting services, and strategic tax M&A advice for acquisitions and divestments. We also have Daniel Bisignano. Daniel's the Director of International Investment at the State Government of Victoria. Daniel has extensive experience working with Asian companies and governments to attract and facilitate investment into Victoria. We have Zhining Young. Zhining has over 10 years experience in facilitating cross-border investments by multinational companies and maintains close working relationships with Chinese investors into Victoria. And he obviously does this to ensure that relevant government services are accessible by Chinese companies. And we also have Matthew Williams. So Matthew is the Acting Executive Director for the Investment Attraction Branch within the Jobs, Investment and Tourism Division of the newly formed Economic Development Cluster of the New South Wales Treasury. Matthew has a very strong investment attraction team. They're responsible for promotion, attraction and facilitation of private sector-led investment into the state of New South Wales. And on that note, let's start the third panel session. So what I'll do firstly is get each of our panel members to, I suppose, just run through, spend a minute just sort of introducing themselves, but also just explaining how their role is relevant to attracting investment to the agribusiness sector. And we'll start off with yourself, Richard.
Thanks, Matt, and for the intro there too. And look, as you said, I do manage ANZ's specialised agribusiness division within Victoria and Tasmania, as it's called these days, corporate agribusiness, as it's probably more commonly known to a lot of people. And Victoria and Tasmania obviously is a pretty a vast space in terms of the sectors we cover and the customers that we have. In terms of where that business itself fits, it fits between our regional banking, agricultural division, and at the topper end, our institutional food, bev, and agribusiness function itself. So it's a very large space that we cover in terms of customers and breadth of the space itself. What I would say is that we've seen an enormous amount of investment within Australian agriculture over the last, well, decade really, and keen to share a few of those insights with the audience today.
Thanks, Richard. Jae, go Jae next.
Thanks, Matt. So I'm Jae Debrincat. I'm a corporate international and transaction taxes lawyer. I work regularly in the deals advisory space with agribusiness clients and investors here at Zhining, Australia. Just kind of some initial thoughts. So Australian agribusiness as an industry has always been pretty attractive for local and international investors for a range of factors, like the quality of our produce, strategic geographic position and resources, market access to Asia, etc. However, during these uncertain times, agribusiness has also provided some much needed stability in our economy, providing jobs and supporting the community while still producing quality produce and strong export and domestic sales. And all of this combines to make agribusiness one of the most attractive industries at present for investors looking for opportunities during and kind of post-COVID and the economic downturn. So while we don't still have an end in sight for the pandemic, I think experience tells us that periods like this of economic upheaval often drive significant M&A and investment activity, and businesses look to rebuild and redesign themselves to survive and capitalise on the changes driven by the downturn. So Australian agribusiness is just perfectly positioned at the moment to access and that capital and drive growth during and post-COVID. Thanks, Matt.
Thanks, Jay. Matthew Williams. Matt, go to yourself.
Matt, yep. Matt Williams, I'm the Executive Director for Investment Attraction within New South Wales Treasury. So we have the pleasure and the responsibility for promoting New South Wales to businesses looking to scale and grow and enter the market here. So we will work really closely with our network overseas, our team at the Commonwealth level, Austrade, to really, I guess, promote why agribusinesses should be looking to locate and scale and grow in our state, connecting them with key opportunities, and facilitating and really hand-holding that investment across the state, bringing in our partner agencies to make it as seamlessly as possible. So really, happy to be here today and keen to talk through some of the opportunities within New South Wales.
Great. Thanks, Matt. Daniel, we might jump to you if that's okay. Yeah, thanks.
No problem. Thanks. Thanks, Matt, and thanks for the invitation. Also happy to be here. So very similar to Matt's role, I work within Invest Victoria, Director of International Investment. So we work with global investors to attract and facilitate investments across a range of sectors, but agribusiness is a particularly important one for the state of Victoria. We do this through our network of 23 offices and international partnerships with a range of intermediaries around the world, but also very closely with Regional Development Victoria and Agriculture Victoria that hold a lot of the relationships with the large and not so large businesses within the sector in Victoria. So our focus is really on attracting, I guess, international investment that builds private sector capability, access to market, and essentially creates jobs for Victorians. And just to give you a bit of a flavour of the importance we place on it and the traffic and the transactions that we get involved with, in the last 2 years, we've facilitated almost $1 billion of investment into the sector that's created over 2,500 jobs. So it's a particularly important one and one that we put a lot of resources towards.
Great, thanks, Daniel. Zhining.
Sure, thanks. Yeah, thanks, Matt. Good afternoon, everyone. I'm the China market lead with Invest Victoria, working in Daniel's team. So my role is mainly attracting, facilitating those investment from China, although it's across multiple sectors, but there's sort of a strong focus in the agribusiness, given that Victorian exports quite a big amount of agri to China, and it's one of our biggest markets for agri products and produce. So I think that in the past few years, we've facilitated quite a number of investment in agri from China, for example, in food processing facilities, intensive cattle farming, agri-tourism projects such as winery expansions, regional hotels, agri products testing labs, etc. So just a flavor of that, hopefully that we can have some discussions today in details. Thank you.
Thanks, Zhining. And Tim.
Thanks, Matt. Good afternoon, everyone. So my name's Tim Baird. I'm the branch head of the Case branch in the Foreign Investment Division at Treasury. We have about 100 case officers working on reviewing applications from foreign investors for approvals to invest in Australia. We are responsible for advising the Foreign Investment Review Board and the Treasurer in relation to those applications. And it's worth pointing out that the Foreign Investment Review Board is an advisory body only, and the decision-making power for assessing investment in the national interest resides with the Treasurer. Thanks, Matt.
Right. Thanks, Tim. Thanks all for the intros. So what we'll do now is we've got a few questions that we're going to ask different panel members. So I'll kick off with the first one. It's to Richard and Jay, I think, is best. So given the current economic and social climate, what does the panel see as the available sources of funding or capital for agribusinesses at present and over the next 12 months? Might start with you, Richard.
Sure, thanks, Matt. Look, the answer is, pleasingly, there are multiple sources of capital that are still available for investment within Australian agribusiness. And we look at where they're coming from, it's coming from both local and foreign investment, as well as the bank debt market too. And if we step back and think about why that's still the case, well, when we look at agribusiness as a sector within Australia, it's remained relatively insulated from the impacts of COVID, as distinct from many other sectors of the economy. Touching on foreign demand very quickly, within ANZ, we've observed through our network a continued strong interest in investment within Australian agriculture, even through the crisis, noting there's been a significant global economic downturn and we've got geopolitical risks that we're all well aware of. To consider why the demand is still there, really it comes back to an alignment of a lot of the key fundamentals. To quickly touch on a few of those, we've got healthy commodity prices. We have favourable seasonal conditions within agriculture. We've got record low interest rates driving a favourable cost of capital for those investors. Turning attention quickly to local investors, and again, there is really strong demand that exists still there too. Consolidation, it needs to be said, is a real feature of Australian farming, and it has been for a number of years. And we've got many families and corporates that are continuing to look to expand. Consider too that we've had rising asset values within Australian agriculture for a number of years now, and that's significantly built equity bases. That equity is being used to help build scale, to drive efficiencies through larger operations, and in the case of family farming, really drive intergenerational wealth. So there is continued strong demand from that space as well. And if we look at the bank debt market, well, pleasingly, appetite from banks on the whole within Australia has remained. So that's, from our perspective, a good thing, and a good thing for farming itself. Certainly from an ANZ perspective, we've remained open for business during the crisis. We've continued to see good transactional flow, primarily from our existing customer base, but also from new to bank opportunities as well. And look, it needs to be said that in a crisis like this, we have to take a cautious approach to risk to make sure that we're taking on the right risk to these new transactions and partnering with those that have a demonstrated capacity to be successful within their sector. And so whilst we need to manage that risk carefully, I would say that on the whole, agriculture within Australia represents a relatively safe path of investment as distinct from some of those other sectors in the economy.
Yeah, great. I agree, Richard. Thanks for that. Jae?
Yeah, look, I think I'd largely mirror a lot of what Richard just said. What we're seeing from an equity investment perspective is there is still activity in the market. It's slowed down significantly over the last few months, obviously in line with the economy. And I think there was a little bit of stage fright when the new FIRB rules came in, but that's largely starting to unwind again. And we know specifically we've got several deals in progress in the agri space, particularly in kind of primary production and logistics, feeding supply chains. So despite or because of the pandemic, organisations are still looking at ways to meet their growth and investment goals in this kind of market. And while the deals do tend to be a little bit smaller than they were, say, a year ago, and are happening a bit slower, that's really just because of challenges like the inability to do site visits, for example, rather than any specific economic issue. And we, from a kind of speaking generally from an overseas investment perspective, what we are seeing is people are looking quite seriously at kind of the larger, more mature operations, where they're kind of not the top end of town, but kind of the middle of the range deal size. And local investors are very much looking at kind of complementary businesses that can be vertically and horizontally integrated into their operations to drive their efficiencies through this kind of pandemic period. And the last thing I'd kind of add to that is we are also seeing a lot of interest in kind of particularly specialty areas like ag tech, where organisations are looking at ways of improving their methods, supply chains, product quality, traceability, sustainability, even data analytics and Internet of Things style solutions to kind of complement their existing operations. Thanks, Matt.
Yeah, thanks, Jae. Couldn't agree more. Yeah, site visits is probably the one inhibitor at the minute, but there seems to be a lot more sort of domestic focus on roll-ups versus foreign capital at the minute. Next question is to Matthew, Daniel and Zhining. What specific opportunities for investment are you seeing for the agri sector? So I might start with you, Matthew.
Thanks, Matt. I think from our point of view, I mean, it's been one of those sectors which is, in certain aspects, has really benefited in some ways from COVID, from our point of view. Some of our major opportunities that, as a state, that we're really looking for active investment and really seeking to promote globally, centers certainly around our new Western Sydney airport. So for us, for those that don't know, the Commonwealth Government is delivering a brand new airport for Sydney, about 60 kilometres west of the current CBD. And really it represents for us a fantastic agribusiness opportunity because it has that connectiveness into regional New South Wales. It'll be our first 24/7 airport with no curfew. So it actually gives us the ability to ship produce and value-added products into the Asian market overnight. So it really does change the landscape for us. So we're seeing a lot of interest around that project in particular. With the airport opening in 2026, but we're actually looking at activating certain land around that within the next 15 to 18 months. So this is actually one of those projects that really is front and center for government moving forward. The real particular interest for us is the creation of a 500-hectare sort of integrated intensive production hub that will be on the western side of the airport. So it will provide both production, value-adding services, literally on the adjacent airside to the airport itself. So that's a major focus for us in the more traditional agribusiness space. And the other area for us is definitely agtech. So state government through our Department of Primary Industries has really invested in a facility in Orange run by DPI, which is called the Gate. So it's our I guess it's our global agtech gateway for agtech startups. We obviously are looking for both overseas startups looking to connect in with farming capability within New South Wales, and it's always also where we're looking for, I guess, overseas VCs looking to connect with agtech businesses in New South Wales. So for us, DPI are a great host of that. They're one of the largest R&D investors in the state and definitely nationwide. I think we have several hundred participants either going through the mentoring, incubation, acceleration programs there as well. So from our point of view at the agtech space, it's very much really at the forefront of our focus, and that's in Orange and just west of Sydney. So that's sort of the two areas that are really front and centre for us right now.
Great. Okay. That's very good to know. Daniel, for Victoria.
Yep, sure. So I'll touch upon some of the areas that I guess we're seeing internationally in terms of interest, but just to go off a comment that Jae made earlier, definitely site visits and the inability to hop on a plane and actually kind of engage with stakeholders and actually see sites is inhibiting international deals being kind of progressed. However, I'd say that the actual kind of interest that's coming through agencies like Invest Victoria is just the same. So I would imagine there's going to be a huge pent-up demand for the deal flow as soon as borders are open. So, I mean, with that context, I think, from our perspective, what we're really seeing is areas of interest from international investors across the Asian region primarily, but also Europe and the US. Horticulture, especially enclosed horticulture, glass houses with high value, high margin products are of particular interest to a lot of international investors. So there's a lot of interest in searching out local partners that they can progress discussions with to establish or to expand existing kind of facilities. One particular interesting one that's maybe of relevance is cannabis production. So we see that as a big horticultural growth area, and one in which, because of the recent changes in legislations in Australia and accommodating frameworks around the world, is getting a lot of attention. And this is from small enterprises all the way to massive multinational billion-dollar enterprises as well. And dairy has always been a very large kind of area of interest for international companies, especially from China. And that's very much about investments that vertically integrate and provide supply chain opportunities. The other area I'd probably say, the two ones I'll quickly touch on, interest in differentiated products. We are a high cost of production country, and so it's seen as needing to have some extra value add. So organic and specialty kind of items that have niche markets but high margins are of particular interest to a lot of international investors. And the last one I'd probably touch on is agricultural investments or agribusiness investments that have a tourism component to it. Agritourism is of particular interest, where you have large international conglomerates that also have real estate arms and property development arms, and they're looking to combine those areas of interest as they're entering the market or partnering with a local agribusiness. Thanks, Matt.
Yep, that's great. Thanks, Daniel. And Zhining.
Yeah, well, thanks, Matt. Yeah, I think that Dan covered it pretty well, but I think that from the China-Asian angle, interesting, I've just got a text recently from my friends in Shanghai saying, we're paying like $10 equivalent of RMB, 60 RMB, $10 for a liter of Australian milk. Well, people there, they sort of really value Australian high quality agri products and produce, and people paying a premium price. But certainly, all those investments, a lot of them are driven by those trade opportunities, and then we see strong interest of companies investing in supply chain efficiency, cold chain, etc., and then quickly get our fresh produce into the markets. For example, that recently we helped a testing lab called the CCIC lab. They can get the products tested before shipments in Melbourne, so that will reduce the quarantine and testing time in China. So just make sure that the products won't be stuck with the Chinese quarantines and customs. So that's one area, and also, I guess, the sort of technologies that can track and trace the products. People paying premium price, and then they want to know, I buy the beef and I want to know where it's coming from, even that which farm, which city, or even which cow. That's even better. So that's something really drives some of the new investment from the region.
Great, thanks, Zhining. And that sort of QIC stuff, that'll make a huge difference, because that is an area of opportunity I think can be easily addressed, and it's great to see that you're all doing something about it, so thank you. Next question's for Jae, Tim and Richard, probably best. And the question is, what should agribusiness operators be considering before looking to attract investment or to invest? So I might start with yourself, Jae.
Thanks, Matt. Look, the best advice I always give someone looking at investment, particularly if it's their kind of first time going to market, is consider the what, how and why of the investment opportunity you're proposing to the market. So what are you looking to achieve with the additional capital? What part of your business, or is it your whole business that you're offering investment into? And why are you seeking investment now, and how will you achieve the promises once that investment is made? Kind of leading from that, take time to consider what you'll do to prepare your business for investment. It's obviously going to be a very different world when you've got, say, an equity partner in with you. Think about things like whether you need to restructure your group or clean up any historical legacy issues before opening your business to due diligence. Consider getting external advice early. I know it sounds a bit funny coming from an advisor, but it is one of the things that does tend to catch out particularly new players to the game. I'll leave to Richard to talk about debt funding, but just take time to get your accounts and forecasts prepared if you're going to apply for new debt, and think about what kind of security you're willing to provide over that capital. What we regularly see, particularly where, say, primary producers are looking for external investment for the first time, is solid agribusinesses that have grown out of, say, successful family farms. So the growth has kind of been organic, and there hasn't been a holistic strategic plan like a corporate would have around how assets have been acquired and security's been provided across those assets across the group. A good example of that, so one of the businesses we've been assisting recently had acquired over kind of decades much of the adjacent property of the original family farm through things like the self-managed super funds of the group, the family group, and ownership of the business assets was scattered across kind of an extended family. So in order to open the business for corporate investment, we had to go through this fairly extensive process to identify the correct assets and then plan a restructure across the relevant parts of the group into a single commercial structure, which could be properly valued and then reviewed by investors. So for an external investor coming in, it can often be a bit of a showstopper, or at least quite unappealing, where assets are held across a range of companies, trusts, self-managed super funds, and even individuals, often without kind of proper legal documentation around the use of those assets and assignment of value. Thanks, Matt.
Yeah, thanks, Jae. Tim, we might jump to you from a government perspective, or even from your own perspective.
Thanks, Matt. I think the key thing for vendors to think about if they're looking to sell agricultural land to foreign investors is that the Treasurer has a requirement that before a transaction can be approved to a foreign investor, that the vendor's undertaken an open and transparent sale process. And the rationale for that is to give Australian investors an opportunity to participate in that process. And generally, to satisfy that requirement, you need to have a 30-day period of public advertising, yes, in the 6 months prior to the sale process. I would say for new investors that are looking to understand the FIRB process, we're always happy to meet with people, have conversations over the phone or email. We've got offices in Sydney, Melbourne now, and Canberra. I think that the other thing to highlight, and a lot of people may already be aware of this, but the Treasury in March made an announcement to temporarily lower the thresholds due to COVID, and so all foreign investment is now screened at a $0 threshold, which has been lowered from a $15 million sort of cumulative threshold. So that has resulted in a significant influx of applications. We have increased our staffing levels to address that. That being said, the typical 30-day time period in some cases is now taking longer, and at the time the Treasury set up to 6 months. I think we're doing better than that on most cases, but vendors and buyers should be factoring in a bit of extra time into their timetables to allow for further approval in the current environment.
Great, thanks, Tim. And I think we had some of your colleagues on a previous session, and I think on average it's out to about 45 days, but that's still a relatively short time frame on average for getting these processes done. So hats off to your team for keeping everything moving. Richard, your views on this one?
Yeah, sure. Look, I mean, in some ways this is obvious, but what we see as the most critical factors from both our customers and other transactions we see more broadly is that there's a need to be partnering with the right people. And what I mean by that is that if you want to bring in an investor, if you're selling holistically or selling all of your business, if you want to enter into a sale and lease back and continue to manage it, you've got to make sure it's the right partner, it's the right strategic fit, and that you're comfortable that you can work well and constructively with them over the medium term. And finding that right investment partner often comes with, well before that, attaching yourself to the right advisor who can steer you in the right way and give you everything that you need to get in place and be able to provide to a prospective investor. Because getting back to Jae's point earlier around the banking perspective, well, really what banks require is not too dissimilar from what an investor, in particular a sophisticated investor, is going to require to see. They will need good information delivered early and easily. They will need a management team in which they can absolutely trust. In order to get the right robust MIS in place, often operators that we see can be very well served by partnering with good advisors who can make sure that they can give that to their prospective investor universe at the right time.
Yeah, wonderful. Thanks, Richard. Great insights, and we've got time for one last question, and I'll direct that to Zhining. So Zhining, what are you seeing as the opportunities and trends in the international investment that's coming into Australian agribusiness?
Sure. Oh, thanks, Matt. Lucky got the last question. So, well, I guess, for the past few years, we've seen that one trend is it's pretty much moving towards some new technologies, in particular technologies that could improve the efficiency of the agri sector, particularly, water efficiency, and a company talking about, carbon sequestration, all that. So sort of representing some of the future tech in the ag sector. And also, we've still seen strong interest in Asian countries, China in particular, investing into ag manufacturing, processing, in particular, those products that are in high demands in those markets. For example, dairy, even wineries. And now we are helping a Chinese company at early stage, sort of building a green to starch factory. So that's all happening. I think that the investors in Invest Victoria that we are mainly working with, one is those corporate investors, and they are mainly invested into those large projects, manufacturing, peak farmings and all that. And also we've still got strong interest in what we call that high net wealth individuals, in particular those business migrants. And they are interested in a range of other sort of agri projects as well, including some agri property projects, and then in particular some projects they think are maybe in the next year or two, then that could be transformed into a tourism project somewhere with a nice view. Then maybe in the 2 or 3 years time, we'll build a hotel, something like that. So Well, we certainly work very closely with those investors. I think that in particular for a agri-tourism, well, we tell them, something that you think you can do, maybe you can't. So certainly due diligence is pretty important. The sort of regulatory environments, planning requirements of that. So that's why we encourage companies to work with us very closely, make sure that what you get is what you think that you get. So. And also, we sort of encourage companies to work very closely with local consultancy firms like Zhining, accounting, legal, planning, etc. So make sure that they minimize all the risks. So yeah, that's roughly we see where is the trend latest recently.
Great, thanks, Zhining. I think that's a good message to finish on. There is a number of Asian groups in particular, be they high net worth or well-established companies who have domiciled operations here in Australia. They have their money out, so to speak, and the access to funding here locally. So they are a continued source of investment for the ag sector, and people shouldn't just think that because of COVID or FIRB sort of processing issues that there isn't money available from foreign investors, because many of them are already here and established. So thanks for that session, guys. Great insights, and thanks to Richard, Tim, Jae, Zhining, Daniel and Matthew. So thanks very much, guys. Great session. See you all soon.